Cool. Okay. Well, thank you all for being here at Lobster DAO. This is very fun. A first edition Solana Boston pop-up, which I'm very excited about. And Phil and Boston DAO have been incredible stewards of. We have a really fun debate happening today. We call it the DATtleground. We're talking DATs, digital asset treasury companies. And this is a chance for us to get into the mechanics of what digital asset treasuries are, what the hubbub is, what the business model is, where it's going, with two people who know the topic very well, but from different perspectives. And so, we'll kick it off, but we'll also keep it really casual. So feel free to pop in after we do maybe the first, sort of set of questions. Just like pop in, ask questions. We'll keep it casual. Justin Nadil is head of growth.
Yes.
Head of growth at Soul Strategies, which is I would say, pioneer in digital asset treasury companies on Solana. And Wyatt is a partner, investor at Castle Ventures. And he's based right here in Boston, investor in a range of different things in the crypto space. And got a lot of pitches for DATs. And I remember once I was in an Uber with Wyatt, and he was just telling me all about the DAT pitches he's getting and how he's evaluating them. And so I thought this would be a really fun debate to have. So we'll start with Justin. Justin, you've staked, no pun intended.
But maybe intended.
Maybe. You've staked a lot of your career on joining a DAT. Tell us what inspired you tell us what Soul Strategy is, right?
Absolutely.
And then tell us what about it compelled you to say, this is what I want to spend my time on.
Yeah, no, thank you. And thanks to Lobster DAO and Phil and the team here for facilitating this, and thanks to all for joining. So just quick commercial on Soul Strategies. I think by most regards was the original DAT, in some ways actually predating MicroStrategy. Started back in 2018, publicly traded up in Canada, focused on Bitcoin mining, amongst other digital assets. Trudged along at a nice enough clip for a couple of years up until just about a year or so ago, when together with an influx of some new capital and talent and investors at the board level, decided to make the pivot to focus exclusively on Solana. So jettisoned any other assets that were held on the balance sheet, and what was left was a treasury strategy, which we'll get into what that means and how we're approaching that here in a moment. But then also as a point of differentiation for our business, maybe versus some of our peers, we also own and operate our own validators. So we have 4 validators, different branding, but all under the Soul Strategies umbrella. All pointed at Solana, and all serving different use cases for different sorts of clients. And so, over the summer, as the DAT craze was really taking hold, we in some ways branded ourselves as a DAT Plus or a DAT Plus Plus as a way to differentiate. Hey, we're more than just the treasury. We have this other offering that we'll continue to grow on. But that's where we are as a company, right? And we're at such an interesting point in the market that the strongest will survive when it comes to DATs, and I know we'll get into what that may actually mean here in a little bit. But it's definitely an inflection point. I'm excited for what the future holds, both for the company and myself, right? So getting a little just under the personal side of things, come from the very traditional capital markets before blockchain and digital assets were even a thing, and so have sort of come full circle back to the space, and excited to join a team in an effort that really focuses on bringing in more capital into crypto, into digital assets through this unique DAT vehicle. Maybe not as unique as it was a year ago, but it's certainly unique as far as what we've seen. And as we think about building in Solana, at least the sort of internet capital markets, we're just excited, and I'm excited to play a role in helping to secure the network and make it as powerful as we all think it could be. So pretty long-winded, but hopefully that paints the full picture for the group as far as who we are and what we're doing.
So I'll push a little further
Sure.
on two things. One is if you could just define what a DAT is, and two, I want to push in what you could be doing anything in the world.
Sure.
You could be doing anything in crypto. Why did this draw you?
Yeah. So as far as what a DAT or digital asset treasury is, I'll provide maybe more of the practical example of why do they exist, right? And up until very recently, it was incredibly difficult for any institutional or sort of regulated type of investor to get crypto exposure unless they were going to go and try to do it on their own with self-custody and managing their keys and all the risks that could come with that. And a lot of folks can't and won't do that for all sorts of different reasons. Setting aside ETFs, which we could always do a compare and contrast between DATs and ETFs, but a DAT is, in most cases, an existing publicly traded company that, frankly, had lost its way with its core business. It was identified by an investor or a group of investors who then, through capital infusion and representation on the board, pivot the company's strategy to become a DAT, right? And there's all sorts of public filings and things that have to occur to sort of make that official. But a lot of the DATs that you see today are medical device companies or consumer product companies or online K through 12 learning companies. In some cases, those businesses will continue to exist. Some cases, those businesses will go away. But they really provided a pathway for folks to spin up these DATs, which then provide access to institutional and, in some cases, retail investors to get direct crypto exposure, right? So these DATs are out there raising capital. They're buying Solana or Bitcoin or ETH or nth asset down the list, and they're trying to do that as effectively and efficiently as possible, so that asset sits on the balance sheet and hopefully grows in price, grows with staking yields, for instance, or other DeFi activities. And so it's a vehicle for investors who otherwise couldn't get access to this market to get access to it in a way that's as close to the asset as possible. And then for me personally, just I think very quickly, spent my career in the capital markets, understood kind of what worked, what didn't. And so with the onset of digital assets, as soon as I figured out what a smart contract was, that light bulb went off and never failed to go off, right, since. And so I'm just a big fan of how blockchain, distributed ledgers, and digital assets can really revolutionize the way the capital markets work. It's not going to be overnight. It'll be a gradual sort of coming together of those two forces. But it's something I believe is definitely going to happen, and something I definitely want to be a part of.
This to you is sort of the next instantiation or compelling instantiation of the marriage between capital markets and digital assets.
I think so, right? And I think it's specifically thinking about DATs, it's a way to, again, increase the accessibility and ways to get exposure to the crypto space. And if you're doing that in a regulated manner, that's the first step, right? You're getting folks comfortable investing in crypto, in digital assets, understanding the risks, the differences between the different assets that folks are investing in. So I just think it's the first step towards, I think, the ultimate goal of having everything being brought on chain or close to it.
So Wyatt, you heard a lot of pitches for DATs earlier this year. How many did you end up investing in?
We haven't done any.
So
I
zero.
guess. Yeah.
And so Justin has said, I'm going to go all in on this particular DAT, and Caroline said, that's not compelling. Sorry, I can't help myself. But tell me about like the anti-DAT pitch. Like when you see DATs come to you as an investment, why haven't they crossed the threshold for what you guys are excited about?
Yeah, sure. And then thank you for moderating as well, and thank you everyone who's taking part in this discussion. The point I'd make, I think the origin of DATs was very compelling, which Justin hinted at, which was, if you go back to about 2020, Michael Saylor started to become this missionary for Bitcoin, and MicroStrategy started to acquire Bitcoin. And this was at a time where if you could only invest in equity markets or public equity markets, you couldn't invest directly in Bitcoin, you didn't want to. It was a way to get access to that, and that made a lot of sense. And it made so much sense that MicroStrategy rode up to be worth 3 to 4x its net asset value. So that's to say the market cap of the stock was worth 3 to 4x what the underlying Bitcoin was worth, which if you were to liquidate the company, then it wouldn't be worth that. So you kind of knew this should bleed back down in an environment where people were less excited to own Bitcoin and didn't want to own it directly. And to Justin's point, there were companies before this, particularly miners, which held some crypto or Bitcoin on the balance sheet, almost because it was part of their core business, because it was part of what they did. But you didn't have this pioneering strategy of, we're going to be a company that is an Ethereum or Solana management company. We acquire the asset in our treasury, and if you own this, that's what you're owning in a way. And then what happened, to Amira's point, early this year, late last year, is people came to realize, okay, if you have Ethereum and Solana, which in a positive market now are gaining a lot of attention, people who invest in public markets, they can own MicroStrategy for Bitcoin. They don't have something they can go and own besides an ETF, which reflects what MicroStrategy is for Bitcoin, which reflects a stock where their sole strategy is to manage and accumulate a crypto. And so as a result, you started seeing these financings happen for these digital asset treasury companies, now coined. I don't, in a lot of ways, take issue with the premise, nor do we, but I'm very critical of the way that the creation of these strategies happened, because what became commonplace is you would take a publicly listed company that would trade from $10 to $20 million in market cap. They would do a PIPE, which is a private investment into a public equity, for call it $100 million. So it was often 10x what the market cap of the original company was. And they would acquire, let's say it's ETH, with that new capital. So the company would then be worth some $100 million with the newly issued stock. And on the announcement, retail would bid and it would go up to some $300 million. And people began to expect the price to go up. So then they would speculate on it right when they hear the announcement. The difficulty I have with that is that the money that went into the DAT in the PIPE deal, which is the new equity deal, was often at a discount to where it was before. And these investors are locked up for 6 months. So typically the structure that'll happen is you'll then have this cohort of investors that own, upon the announcement, most of the company, who are waiting out their 6 months so that they can sell at a profit. And it becomes a bit of a race to see who can exit first. So if you're a retail buyer on the outside, the deck is a little bit stacked against you when you say that essentially the whole company at that point was waiting to exit. Our issue has been mainly that market structure where you have all this interest that comes in. You have most of the companies locked for 6 months and the thing is expected to trade at a premium, and then you expect that behaviorally they're going to exit. And that's where we took issue with the structure. A lot of the investors in these were also venture capital funds, which from our perspective, the job of a venture capital fund is to invest in startups. And we didn't look at investing into a private deal of a public equity so that it can go acquire Solana as a venture capital fund's job. So that's part of the issue that we take with the current market and how this has come to exist in its current form. And to your point about why we haven't participated, what you make of the investment opportunity aside, it's not what we do.
Why do you think, so a lot of venture funds
have been active.
Is what they
yeah.
do, right?
Yep.
Like Terra, Multicoin,
Yeah.
we can list them. Why do you think they decided otherwise?
I think it depends how you look at your job. I think if you look at your job to make your investors money, we all have investors as well, then you can justify and say this is a strong risk-reward weighted opportunity at the moment. And if you say that your job is to adhere to what you said you were going to do. So like we have endowments for our investors and we tell them that we're going to invest in startups. It depends which philosophy you take to that. And we feel like we owe it to them to do what we said we were going to do, even at the expense of maybe not capitalizing on this opportunity. And I think that others have gone a different direction with that.
Right. You have your LPs.
Right.
You told your LPs one thing.
Yep.
They made their portfolio allocations accordingly.
Yep.
And then it would be unaligned with what your sort of pitch was to your LPs.
That's our view. Yeah.
Okay. Justin, I think what's interesting about Soul Strategies is you sort of predated the whole DAT craze, right? Tell us a little. So Soul Strategies right now is trading at a market cap that's roughly like the NAV is.
Yeah, it might be about 1.1, so it's a slight premium, but certainly not where we or the market had been 6 months ago, right? When it was multiples of it.
So tell us, I guess, two things. One is, do you see that being where this whole craze sort of evens out? Mm-hmm. And two, when you think about the strategy for something like Soul Strategies, like where do you go from here?
Yeah. Look, I think there's a question that we should ask ourselves of if a company does trade at a premium to its treasury holdings, right? So the MNAV, that sort of acronym we've been using, if it's above 1, that implies that the market's giving you some premium for the value of the assets in the treasury, right? So if you have 100 million in SOL and your market cap, and that's literally your only part of your business, and your market cap's above that, they're giving you some premium for something, right? different companies will have different premiums for different things. You know, it could be the quality of the team, right? I think at least with a lot of the initial launches, it was based on expectations of the team that's that's going to be running the show. I'd like to think for a company like ours, setting aside the holdings we have in the treasury, we have a real revenue generating business with third-party clients providing us stake to delegating stake our way, so we can put it to work on their behalf.
Can you explain that business?
Oh, yeah, please, yeah. So at Soul Strategies, there's a dual parts of the business. There's the treasury strategy, right, which is similar to how Wyatt was describing, sort of playing the capital markets game to efficiently accumulate as much Solana as we can, and then stake that Solana. I think what makes us unique is when we stake that Solana, we stake it with ourselves, because we have our own Solana validators, and so we put that money to work, eating our own dog food, if you will. But then we also go out and work with other large holders of Sol, including DATs, including ETFs, including other early investors in the space, who will then delegate their Solana to us to stake on their behalf. So, similar to if anyone here has staked ETH or Sol through the different sorts of providers or LSTs, although we don't offer one today, very similar sort of concept, right? We have third-party clients, they send the Sol our way, and we stake it with one of our validators, depending on the relationship. That's pretty unique when it comes to the DAT space, where most DATs are just there with the treasury side of things, and they don't have a real kind of revenue-generating business that needs to be managed and that can support other activities.
Can I ask why you think that is?
Why the others don't have it?
It would feel so obvious for, at least coming from Solana world, right? Like, what do you do with Sol? You stake it.
Yeah. Look, I think part or maybe most of it just comes down to the expertise, right? It's not easy to run a validator. It's not easy to run a validator at scale and profitably. And so unless you have a team with the know-how and the background to do it, I mean, even if you're paying a cut to someone, you're probably still better off kind of delegating your stake to someone else to do it on your behalf. That's just from a pure practical perspective. From a business perspective, and maybe we start getting into like what the future of DATs will become. I'm very much of the mindset where it's evolve or die, right? And so the existing DAT model of just literally holding the asset in your treasury and hoping number goes up and everyone gets rich, that's not going to last too much longer, if at all. I'm just a firm believer that setting aside certain circumstances, the winners are going to be the ones that are offering a diversified suite of products and services, either as a complement to or supplement to the actual core treasury strategy, which kind of going back to one of the reasons I joined Soul Strategies is, we have the foundation in place with those validators. And a big part of my role is going to be, okay, what are the concentric circles that we build from there that can continue to meet the needs of our clients as more and more volume is driven through Solana?
What DAT or DAT pitch came the closest to being compelling for you? Or if you saw a pitch come your way, would make you think,
The first ones.
Yeah.
It was a chronology thing, without a doubt. Because it was, you could justify the demand side much more easily when it was something like, this is going to be the first Ethereum one, this is going to be the first Solana one. Because at that point, the risk reward made a lot of sense, and that you haven't had these actors who are holders of, let's say, MicroStrategy enter the market yet, incrementally became far less compelling. And I think that's just because of the supply and demand factor.
Were you guys intrigued by any particular assets, one over the other?
Ethereum and Solana were the only two that were compelling. And I'd say they were somewhat equally compelling from the chronological perspective. Of the first few that we saw were compelling. Later on, it became far less compelling. Like, I'd say we almost became more determined to stay out at a certain point, because in our view, the more capital you have across organizations, the more, in a way, frothy this becomes, or dangerous. Because I can talk more about it, but we worry about, like, if there's an unwind, if these start to trade below NAV and then people try and liquidate them.
Yeah, let's talk about.
Yeah. Okay. This is.
Give us doomsday.
A deeper conversation.
Oh, you mean 2 weeks ago, Friday?
Yeah, right. So I was going to say that was going to be my point. We saw something really interesting happen on Friday of a couple weeks ago. And what I would point to as to why it happened is, unfortunately, the crypto industry, in my view, is systematically addicted to leverage right now, particularly in the hyperliquid sphere. And so what happens is if you have a market downturn, let's say 10 or 20%, you get all these automatic liquidations that happen. And so that means that someone is trading Bitcoin ETH on 10x leverage and they get liquidated. All of a sudden, there's an underlying asset pile that needs to be sold essentially immediately. And the problem that has, if you look at an order book, which most crypto trades off order books, you're going to have all these sell bids with just not enough supply of matching buy bids unless you think people are really buying the bottom at that frequency. And so you see these markets literally drop to near zero. Like some of the longer tail assets, like I remember looking at Celestia chart, like the bids there got really, really low. And my concern is that we could see a similar structure happen in the context of digital asset treasuries, in that if we have a scenario where they start to trade below net asset value, which could happen if the crypto market just struggles and there's not appetite, then all of a sudden you have something that trades at 0.8 or 80% of the underlying assets. And at that point, if you're a private equity fund that's outside crypto, you can say, hold on, if this is trading at 80% of what the underlying assets are worth, if we think that we can actually sell the underlying assets, we can buy this thing out and make a profit on the underlying assets. So at that point, in a tough market cycle, it becomes essentially a race of who can sell assets quicker. So I look at both the leverage and the like incremental 15, 16, 17 DATs as like mini heroin hits for crypto people, because you see your ETH and Solana go up in price. If you look at the ETH chart, it's a pretty difficult scene in terms of when the DAT started and then when the price really inflects. But I think we get into a really dangerous situation when, if the DATs trade below NAV, if we start to see cascading liquidation across these exchanges, where we just can't handle the amount of selling. And I think our assets could unfortunately go down 60, 70% in value.
And I feel free to jump in with questions at this point. I feel like we're
Yeah.
Oh, go ahead.
Yeah, sure. So you implied with one of your initial answers,
Yeah.
your focus is on creating value through startups. Do you believe that DATs add any value at all to the crypto ecosystem, or is that too of a critical of a take?
So my favorite version of a DAT, to play the prosumer here, is one a bit like MicroStrategy, where they don't raise additional capital and they adopt a balance sheet, even a partial balance sheet crypto strategy. I think that can add value, especially for the interim, because I'd say the strongest argument DATs have today, in my opinion, is that staking ETFs are not approved yet and that you can't do much with the underlying assets of an ETF. So therefore, you're essentially losing out on a risk-free staking rate or the ability to do anything with those assets. In that time period, if you can own them at 1x NAV, you would definitely rather own a corporate managed treasury of a certain crypto asset. So today, I think in that way, it adds value. I think the private financing structure doesn't add value. I think that's extremely value extractive.
One idea I want to poke at, because I don't know if I have conviction in this idea, but it just makes sense to me, which is I talked to a lot of teams, or a handful of teams, especially during like earlier this summer when DATs were really taking off, that had sort of non-blue chip tokens, but still were sort of, you know, wellish known sort of assets, or represented wellish known assets. And they were interested in DATs for exactly this reason. They said, institutions want exposure to our asset. However, like the way that the institution is structured is they can't just go buy our tokens. ETFs are a long way away for us. A DAT would provide institutions a vehicle to invest in sort of our asset. And that makes sense to me sort of on face, but I haven't seen that instantiation of a DAT really come past. I think probably just because it's subscale at this point, right? Like for DAT, in my mind, for DAT to really make sense, like you need to be able to start looking towards at least $1 billion plus market cap, and that's just not real for, or not in view for maybe a lot of these alts.
Yeah, and I think, you know, there's a very real conversation and debate to be had around, so once you go past BTC and ETH and SOL and maybe digital assets numbers 4 through 6 to 8, you start to question, you know, is there a need for a DAT for any asset, you know, in that long tail, right? You know, I'm largely of the belief that, you know, for high quality assets in high quality teams, the game of musical chairs has largely stopped. I know there's some stuff in the works that just hasn't launched yet. We'll see how successful they are. But I think that falls on both sides of the spectrum where, I mean, say what you will about XRP and Ripple, like, you know, that's a highly institutionalized sort of ecosystem, and they're in the works to raise $1 billion to kind of support that via DAT. You can understand maybe that makes sense. On the other end, I think I saw an announcement yesterday that some companies raising money to make Beara chain, or Beara, the token, as their official digital asset in their treasury, which is, much as you may like proof of liquidity and all the cool stuff that comes with that, you probably question why that needs to be a DAT, right? Does that really need to exist, other than if there's some grift behind it, which unfortunately I think there is. So yeah, generally top 5 sort of digital assets, I think there's room here, for these to exist as a way to allow access for folks to invest in them. But then after that, you start to question, like, why do these need to be here?
Yeah, I think I heard on a podcast the line, if you're a pension fund who wants to buy Fartcoin, ... which I was like, that's imaginary. Amir, to your point of like where I think this could exist too, one of the best arguments I've heard is you have these very large, heavily funded crypto organizations that have, in my opinion, in a funny way, very limited exit outcome opportunities. So I think of Consensus, which is accumulating cash. I think of something like Alchemy, which was probably overfunded but accumulated cash. I think someone like those companies, it could make tons of sense to convert into a DAT alongside the standalone business, especially because, frankly, they're tethered to the success of Ethereum anyway. So I think they might as well adopt an accumulation strategy and then hopefully take that vehicle public. Yeah. Which would be a better instance than the private financing model.
And that matches sort of like the Soul Strategies thesis, right? Which is like you have a core business and you have like asset.
Yeah, I mean, you look at someone like a Galaxy, right, where I mean, they accumulate a bunch of different digital assets on their balance sheet, but no one thinks of them as a DAT. They're a wildly successful technology company, right, focused on the blockchain. And I think as far as long-term value creation goes, again, personal belief that folks who trend down that path are going to be the winners. Again, unless you are the one or the two top DAT in a digital asset where you're just going to win based on size, right? And you're going to sort of suck in all the oxygen into the room and attract all that investor interest. But yeah, like we have this debate, started early in this year. We were firmly a DAT, right? And we were happy to call ourselves a DAT, and we introduced ourselves as a DAT, and everyone wanted to meet another DAT. Over the summer, I alluded to before, that evolved into a DAT plus, right? We had to start to differentiate ourselves. Don't quote me on this. I'm of the belief that, having DAT in your name may actually not be beneficial at this point, right? As far as what you're trying to become and what you're trying to pitch to the market about that future vision. So again, it's one of the more, I mean, crypto is like the most rapidly evolving market ever anyway. And then just specifically for DATs over the last 6 months, they've gone from essentially, a concept to almost entirely played out, which is crazy to think about.
To be candid, I think the SEC unfortunately handled the DAT period very poorly, unfortunately. I think they were asleep at the wheel a little bit. I probably think you shouldn't be able to privately raise capital into a public entity to buy a crypto and then launch as a DAT. I think that does material harm, to the point previously, to all of us, to be frank. And I think it's unfortunate because when Tesla announced they were accumulating Bitcoin, I was heavily supportive of that. Like, I think companies should be able to be a bit more scenic with their balance sheets. But
did you say scenic?
Yeah,
like
adventurous. But to Justin's point, it made his job much more difficult, I would argue. The fact that anyone could go pump $50 million into a legacy public equity and call themselves a digital asset treasury.
We sort of joke, I don't know if joke's the right word, but being essentially the first to market from a Solana perspective was both the best and worst thing to happen to us, where it was great to be first, get the name recognition, out there leading the charge. And then on the flip side, we were sort of early to the market, or the market wasn't quite ready for these large financing rounds that happened, literally only 3 or 4 months later. I think we'll still be glad with the decision we made, right? Because it forced us to be more thoughtful and not just go out there and chase cash. Yeah, it's just so it's evolved so quickly.
How do, and separate questions.
Another one if we can.
Yeah, go for it.
So I've heard the idea of DATs being able to do rehab application, lending, earning special yield. What do you guys think about that? I know it increases risk somewhat, but it can also increase the value that you offer to your investors.
Yeah.
It's a great question. Go for it.
Yeah. So particularly for DATs focused on proof of stake chains, right, where you're getting that sort of native yield just across the board, and it's largely commoditized. yes, I think everyone is thinking about ways to boost the yield on their treasury. I think that's where it starts to get kind of murky and into a pretty deep gray area as far as, okay, what are you actually doing with those assets? Because they aren't your assets, right? I mean, as the management team, you may own a chunk of the business, but ultimately you have equity holders and you have fiduciary duty to them. And so you do have to be incredibly thoughtful around, okay, if I'm trying to squeeze out another point, how much risk am I willing to take on? Not just from a market perspective, but now we're talking smart contract risk, which is entirely new for investors to have to understand, what that means, and is it worth those extra 50 basis points or 1 bip to invest it in some emerging protocol that's untested. On the flip side, there are obviously battle-hardened protocols where you could engage in sort of borrow and lending and other yield enhancement opportunities where I think most folks would feel safe in doing that. But it all goes back to the team, right? You're putting faith in the team to be a good steward of your capital and those assets. And like if you were looking for just incredibly exotic crypto trades, you probably can find that elsewhere, including maybe in your own hedge fund protocol. I don't think it's appropriate for folks to really kind of hit the bleeding edge from a trading perspective, unless they're fully open in disclosing that and their investors have bought in. Which I guess if that's the case, then you're all in it together.
Yeah, I don't take issue with those things on principle. I take issue with that it's so divorced from what's permitted from the ETFs and from, like, frankly, an explicitly legal perspective. And the other thing is, to go on a quick tangent, like I would prefer they're doable through ETFs because ETFs are a much more tax efficient structure, for example. In a crypto ETF, you get they're tax advantage. They're a vehicle that's meant to offer access to an asset. One of the structural challenges that DATs have is that they get taxed both at the asset level. So if you're buying and selling the underlying asset, and then at the corporate level. So I think, yeah, there should be a.
Can you break that down? So you're taxed both on like the sales of the asset,
right,
and general
capital gains, and then on the corporate tax, right? If you're someone who's holding the asset, and you're paying twice as an investor in a way, then as an investor, and so I think, yeah, there should be an opportunity for someone, if they want to, with the disclosures, go invest in the further out there 8% yield product, but not in a way where you can't even stake the ETF, as an example. I just think it's very misaligned.
That's a follow-up.
Yeah.
Will the double taxation force the NAVs down over time as the capital gains increase and become a larger part of their total assets? Like they're going to have to pay taxes on that. So
yeah.
Really their money.
Yeah, I think there will be a correlation there. I mean, you could call it like the capital gains overall. That just makes a slightly less attractive structure, is my view, and that will compress NAV a bit. It's important to know what's happening with MicroStrategy or Strategy right now too, which is that they're on their 5th or 6th iteration of debt instrument to try and raise their like Bitcoin per share, which is a bit of a made up metric that they have. So I think to offset that, you'll see a lot of the DATs, which again is one of the parts of Justin's job that I don't envy, is that like there's going to be a competition to sort of become more attractive from like a token per share or a strategy perspective, which I worry about, which that's how they argue that they can compete on NAV, is like, oh, well, we can increase our amount of tokens per share, which in a market where the underlying goes up, you have more exposure to an investor. So that's how they're going to combat that, in my view. But yes, overall, I think the lack of tax efficiency will be a pressure on NAVs.
Yeah. So you're talking about how ETFs can't directly hold these assets in question, but they could theoretically hold equity in holding companies that hold the assets in question. Like you have a lot of interesting pass-through structures with, for example, Netherlands holding entities.
Right.
That do have the ability to directly
Yeah.
have access to this investment infrastructure token that U.S. investors might not necessarily directly legal access to.
Yeah.
And as long as the actual income from sale and purchase in terms of that holding company is passed from an equity perspective ownership, within that yield structure ETF in terms of there's no taxation on holding aspects. It would then go to the ETF holding, which would then have that tax benefit.
Yeah, I mean that's a potentially workaround. Some of these ETPs are also doing yield strategies and stuff like that. My point, I'm just bothered that like we're relatively behind, from my perspective, on a sophisticated regulation of like Bitcoin and ETH and SOL ETFs. from a risk perspective.
Yeah, I mean, I'll say look, I have no visibility into this as like an individual, but the thought is that whenever this government shutdown ends, like the range of sort of like new ETFs on the market is expected to be relatively limited. So hopefully this is like a short-term issue, at least with like sort of maybe 5 to 10 additional tokens.
Yeah, and I think we are eagerly awaiting the government. Well, I think we're all waiting for the government to unshut that, to come back, open. That's unshut, to open back up, particularly for the staked Solana ETFs, because, and this is all public information, we're launching as the staking provider to VanEck and their staked Solana ETF. And so, as we think about other ways for folks to get access to crypto apart from the DATs and how we still contribute to that, right? We want to be that trusted staking provider to the folks that require the most compliant staking infrastructure, right? And so we're very excited about that. We're actively trying to work with other ETFs and ETP providers, both here in the States and globally, as a way to just kind of support them in the most compliant way possible. I did want to make one note as far as, just because I think it's interesting, since crypto is very global, as far as like where new DATs may be emerging. I made some comments that I felt like it's played out. That's largely limited, I think, to the Western capital markets. There's some opportunity in primarily places like APAC and maybe the Middle East as well, where on the local exchanges, some of these DATs are being spun up, which then can attract capital from that local investor base that may not be able to invest in the US-based DATs, as a for instance. And so, again, if it's an ETH DAT or a Bitcoin DAT or something else spinning up in South Korea, for example, you can maybe squint and see how that could be accretive to the overall project here, right? But again, here locally, I think the music's largely stopped as far as new high-quality ones.
Why did you have additional frustrations with like ETF regulation beyond sort of what we think will be alleviated in the coming months? But like, I'm not sure if you're pointing to something beyond.
It's mostly the staking issue in the primary future. I mean, I would like for them to start to open up like what you can do with these assets too. But to be fair, I think staking is the primary one that would make sense. I think it's a bit silly to assess like the staking issue as a risk vector, because it's like the entire underlying value of the asset is threatened if something were to happen with like Solana staking contract. So that's the primary one. It seems like there's very little market fit for these longer tail ETFs, candidly. So I think there'll be a 3-asset landscape for the time being.
Yeah, I mean, there is like an interesting irony as I sort of think about it, is like the whole point of internet capital markets, these are global capital markets where anyone can get access to these assets. But you see these sort of like new products come onto the market with the intent of being able to allow more audiences to have access to these assets. Like,
right,
someone told me like, the crypto industry is learning like 1,000 years of financial history in the span of like 20. And it feels like you can start to see how you like contort yourself into like different products, like how we end up getting sort of where we are today in just like a sped up version. Anyway.
It is interesting. I was just going to say one more thing on that front, which is that like we've seen in particular the retail bit has been very strong, like in Korea, for example, this cycle, and then in Japan to some degree. And part of that's been to your point because they were more readily open to owning tokens directly previously. So there's a statistic that in several countries in Southeast Asia, crypto ownership is higher than equity ownership. Yeah, so they've already had the wealth effect of a lot of these assets, whereas US investors have been wary of like actually owning these things. So that translates to a stronger bid today. So I think what you're saying is very true. There's like an irony to the fact that we're not embracing the new financial system, but we are. And like for that reason, we're just not seeing the same response here that we've seen elsewhere.
Japan has a tax.
I think that's true. Yeah. Right.
Wouldn't be shocked if the new government that just got sworn in maybe takes a different view on that.
Are they very pro-crypto?
They're very conservative, and I think there's a lot of alignment with a lot of the views here in the States. I haven't looked at it from a pure crypto perspective, but yeah, I mean, for a market like that to have 50% tax on anything is just self-defeating, it would seem. But sorry, I think you had a question there too.
I've heard some DATs kind of describe like a three-legged stool in terms of their strategy. So one is buying the asset, second is kind of a yield strategy, and third is essentially allocating into that ecosystem. I'm thinking about it from an ecosystem growth perspective as a protocol. Maybe it's for anyone. You could look at it almost as an extension from a foundation, perhaps, have an alignment with that. And if you're going to take that approach, I guess my follow-up would be, how many DATs can actually exist for a single protocol? Are we better off with just one, or should there be?
Amir, would you want to provide some insights into how the foundation has supported the DATs? I think most of it's public. You can talk about it.
I think kind of broadly and then give you some like
Yeah.
experience. And Hurricane, did you want to ask your question?
Yeah. I was just wondering, like, why would somebody invest in that over?
Yeah. Okay. Yeah, we can like take both. Well, I would say invest in that versus an ETF. I think it's an interesting question. I think the first of all, the ETF, like a lot of the ETFs just aren't on the market yet, and so I think one of the big questions is going to be like, what happens when we see some of these new ETFs come online into DATs? It basically boils down to like what, if you're an institution, like what your mandate is, what you provide exposure to. So let's say you're a public equities focused hedge fund. What would you feel comfortable investing in? Like what do you want to provide your investees, your LPs exposure to? But I feel like you guys as
A DAT's a bit like a closed-end fund too. So in a way, if Sol Strategies is holding your crypto, you're sort of giving them the keys to manage what they're going to do with that crypto. Versus an ETF is very much like the Sol is sitting in a box, is like my framework for it.
Yeah, and I'll take it from just like a maybe more practical perspective. Like with an ETF, it's either holding the asset, or in some of these emerging ones, it's the asset plus the staking, right? With the DATs, again, for better or worse, there's a lot more flexibility in their mandate of what the management team can do, both with the asset, with the staking, with the yield. But then, for instance, with Sol Strategies, we have an operating business, right? And so there's the opportunity to grow and create value that way, which just doesn't exist in ETF, right? Because that's not the point of that sort of fund product.
And then to your question, so I'm not sure how much I can say publicly. Despite leading this panel, I'm not in charge of that strategy. It's not a foundation. It just seemed like a fun discussion. But like we clearly do have a DAT strategy, and one of my colleagues spent a lot of time working on this. I think the thesis is the following, which is in a world. What's very interesting about being a crypto foundation is if you believe in spirit decentralization, which I think like the foundation that I work for very much does, you kind of have to accept that like the market's going to lead in a lot of ways, right? Like we can think time after time, we think the market's going to go in a certain direction, and we've been like completely shocked by the direction it goes into. So 9 months ago, we like could not have predicted how big story DATs would be, but when they start coming online, you start seeing all these new DATs launch, you kind of have to figure out what your DAT strategy is. So I'll say first, like, is really the market, from our perspective, it's the market that led here, not before. I don't know if you can comment from your perspective what you see.
No, I mean, I just really only what's been publicly disclosed, which is everything you talked about. And I think it's fair to say, because again, it's in the press releases, DATs like ours that have close relationships with the foundation, as well as others where there is that tight alignment around what we're all trying to grow and build together. We are able to purchase discounted SOL from the foundation directly. I can't disclose the actual discount itself, but when you do that, you agree to a lockup period on that SOL as part of your treasury. And that, in my view, is that's just the foundation's way of like seeding these DATs, right, in a way that is very capital efficient to help them get up and running if they need to, or just provide continued access to SOL that can be helpful from a yield perspective, right? And again, that's all public information. That's nothing that's, I think, controversial. I think a lot of foundations are incredibly helpful in doing that, in addition to just the halo effect of trying to uplift everyone and connections and relationships and joint projects and things like that. So.
Do you believe?
Yeah, last question, and then we'll take these two together.
Yeah.
We'll throw both out. And then
And I think, I don't know if you're hanging out at all after.
Yeah.
I spent 4:30.
Yeah, we can hang too. So.
If yours is a follow-up, there's
Just ask them both, yeah.
First, okay. We're going to move into the specific area where the conversation is right now, but do you see any kind of concerns and what is the path forward towards proportional individual representation of holders of DAT shares in the actual governance process of these chains? Because you're seeing in some ways DATs as a consolidation of staking power into a managed entity. And so how do you see a translation of either using existing processes for how shareholder representation
discount from the foundation. That's an initial benefit. You have to have an increasing infusion of more capital somehow in order to continue buying more, of course. And so it seems to me that we'll still run into the problem of this double taxation problem of pressure on the NAV. And so it seems like for a DAT to actually be successful, they have to hit really hard at being a service provider like you guys are or something else. Otherwise, if they just are a DAT in its pure sense, it seems like that's inherently unsustainable because of the upcoming ETFs.
Yeah, I mean, just to quickly kind of respond to that, if I had my way, right, and we were to fast forward, say, 2 years from now, I would want folks to be valuing our business not on anything that looks like an MNAV, but is frankly based on some sort of revenue multiple of our actual operating business that's profitable, has third-party clients, and that hopefully, from an enterprise value perspective, kind of eclipses the SOL that's existing on the balance sheet. That's going to take a hell of a lot of execution to get there, right? But again, that's why I joined, and that's why I see a real opportunity in this market to use the DAT as almost the foundation upon which you're building a much more sustainable, viable, and valuable business. I know you had your question. Did you want to address one or both before I offer any thoughts?
Keep going, yeah.
Yeah, and just as far as sort of voting shares and representation, we personally haven't had any sort of events where this particular topic has arisen quite yet, just because it's still relatively early days. It'll be interesting, and who knows if this is where our strategy goes, but there are other DATs out there who, in addition to investing in sort of the token of the blockchain, are also investing in the governance tokens of individual projects in certain ecosystems, right? Whether that's Solana or Ethereum, or even cross chains, right? There's one focused on stablecoin protocols, regardless of ecosystem. And so in that case, then I think your question becomes super interesting, where if the DAT is the holder of the governance token, and then you have equity holders of the DAT, right? How does that relationship interplay? I think a lot of it, frankly, comes down to the fact that you're betting on the management team that's there. I imagine the majority of the equity shares are there to back that management team because they probably put them in place as part of the transition. It will get contentious in the future when those viewpoints maybe start to diverge, right? If your investors don't necessarily agree with the decisions that your management team has started to make when it comes to maybe governance in certain protocols. I mean, we're talking in like some real hypotheticals at that point, what that all could mean. My guess is the alignment's pretty tight on day one, and as most situations do, that diverges as time goes on, as different viewpoints and strategies are developed. So,
do you know offhand the percent stake that Soul Strategies runs?
Is a portion of the whole network? I don't. We're a little over, I think, 3.5 million SOL today staked. Most of that is from third parties. What's there, about 600 plus million total? It's
the point to answer your question. It's interesting because it really depends on the asset, but I think where we're at.
Say maybe a better way to look at. Sorry, I think I saw somewhere that of all the holdings of DATs in Solana, I think it's still only represented like 3 to 5% at most, maybe, of total. And so you're not even talking about sort of the majority or even a significant stake weight.
Yeah, it's distributed across all the different DATs. Yeah. So the question is if DATs are a successful model and they continue to accumulate, what happens to the network, and has the governance sort of trickle down from shareholders to actual.
I think in ETH, it's even more of a question because I think Tom Lee's company itself has something
owns like 2%.
Yeah, itself, not even across the DATs, and so that's even more interesting when it's one company versus a group of companies. But
yeah.
All right. Yeah. We'll wrap. And
yeah.
Can I get a round of applause for?
No, thank you, everyone.
Thank you so much.
Yeah. Happy to hang out.
Yeah, thank you.
Thanks so much, everyone.